Hello and welcome to another edition of BCR Webcasting. I'm very pleased today to be joined by Abis Soetan, who's the Director, Fund and Asset Manager Group at Fitch Ratings. Welcome, Abis.
Thank you, Michael.
Abis is going to be joining us at our Alternative and Receivables Finance Conference, which will be on the 28th and 29th of next month, November, and that will be in London at the offices of Clifford Chance in Canary Wharf. And the panel session that Abis is going to be joining is about how investors are thinking about alternative and receivables finance as an investable asset class. Abis, we've seen, I think, growing interest in this asset class by investors, and maybe that interest is accelerating as a result of the new law that's come in the UK on the digitization of trade documents, and also on an international basis, Melita are doing a similar thing. What do you think is the perception now by investors of trade finance assets? Is there growing interest? I know there's been some talk about the sector being difficult for investors to understand and the type of terminology that's used. What's your take on that?
Yeah, I think there is growing interest, but I want to sort of segment the investors. So, I mean, the world is built on trade. So trade finance is not new to a subsection of investors. So banks, pension funds, insurance companies, they've been doing trade finance for a number of years. They understand it well. I think the question was, how do you access other investors? For example, the corporate treasurer, etc. And I think that's where we're seeing the growing interest from a broader spectrum of investors. And like you mentioned, those recent progress being made in terms of standardization and education, those have been able to, I'll say, fuel that interest in the sector. Probably still a way to go to get that access. So it's basically all working towards getting a broader access. So I think that's the general trend.
Hmm. And from your point of view as a rating agency, what do you see as the main challenges in rating these kind of assets and funds?
Yeah, sure. So I mean, trade finance fund ratings, it's basically it's a function of the credit quality of the underlying portfolio of assets. And I think the main challenge with rating these funds is getting a reference rating or reference credit quality for the underlying assets. So you can have a broad range in the underlying credit quality. Depends who the obligor is, and it depends on their credit worthiness for that particular transaction. Where you have trade finance for working capital, as an example, these are very minute trades when you compare it to the size of a bond issue, as an example. So, and also it's by smaller SME type, a lot of SME companies. So you don't have them getting ratings. So we don't have ratings for those. So if you're trying to do a fund rating and you don't have a reference credit rating for the underlying assets, that's, I think, one of the main and biggest challenges. I think the other one will probably center around operational challenges of where you have these pools of assets or pools of trade finance assets, and how do we make those or put that in some kind of vehicle where investors can access it. So back to that access question. So what's the infrastructure around it? So that's also a big, I'll say, challenge with basically creating a structure that can be rated.
Mm. And standardization is part of this as well, isn't it? You mentioned it before.
Exactly.
And
Very important.
capital market investors are looking for standardization and definition. So what what are the how is the industry going to cope with standardization and transparency, do you think, in terms of these assets? What needs to be done,
Yeah,
do you think, in getting
yeah,
to standards in place?
yeah. I mean, the first thing, and it's working well, is the willingness. So the industry is very willing and has a number of initiatives towards standardization, and some of them are bearing fruit. Like we mentioned, the electronic trades bill in the UK, Malita, etc. So there's a lot of willingness. There's also a lot of organization. So there's associations and bodies that are basically pulling resources together. They've identified the areas that they need to work on in terms of transparency and education, and they're trying to put things in place to that effect. So and I'll add to that also infrastructure. So part of this is, the standardization is also about the infrastructure. So when I talked of access, so historically, banks and very large institutional investors, asset owners, they haven't had any issues accessing this market through securitizations or just basically being the bank doing the transaction. But to create the infrastructure for others to access, and that's where the fund structure comes. With a fund structure, you can have a much broader set of investors, and that fund structure itself suffered a setback. Back in 2021, there were a few supply chain finance funds that basically weren't doing what they advertised, and that caused
Greensill you're referring to there.
Exactly, yeah, and that caused some kind of and so reputationally, it sort of affected the wider industry, and it made investors, that new group of investors, start to question, oh, what exactly am I getting into? I understand trade finance, but what are these structures, and what does it mean? Where are the risks? And I think the industry has come together and made a lot of progress in educating investors on these instruments or these structures or these new ways of accessing that those trade finance assets. So we're seeing some of that.
And I think a lot of people now understand that Greensill wasn't a typical model for these structures, and supply chain finance arrangements are generally made in a different way to the way it was done by Greensill.
Yes, exactly.
But and in terms of investors and rating agencies being able to assess these assets, what sort of tools are available now, and what sort of tools might be available in the future to enable them to do that?
Yeah, so I think, luckily for us to assign ratings, we do get access to information. So that transparency is there for funds that are rated, as an example. So we have our fixed methodology, our templates, which if we're to rate a fund, we have to receive information on the underlying transactions, underlying asset portfolio. So I think in terms of tools, we have proprietary tools that the fund manager will feed into, in terms of feed that information into. We're able to assess and get an idea of what's the overall credit quality of that pool, which then drives the fund rating. And then also on a regular basis, so I think with these ratings, at least on a monthly basis, we receive the latest pool of assets to assess that it's still within that risk level. So I mean, on the question of standardization, I think that's where probably ratings and fund ratings sort of come in, because you put in the different factors, different structures, different attributes, and we're able to assess that and just distill that into what is the credit risk, what is the market risk of the exposure, and that helps investors with seeing whether that meets their investment objective, whether that meets their risk budget. So I think getting that data to us in our prescribed format so that we can distill it and analyze it and give our opinion the credit risk and on the market risk. I think that sort of would help the industry, or will help those new investors into this space.
And do you see a bright future for this market? Do you see this growth in this accelerating quite considerably in the coming years?
With the momentum, I'll say yes. In terms of, when I say momentum, with the initiatives, seeing these initiatives as they're coming through, all of these are moving towards, that standardization that we all talk about. And once the industry is able to prepare instruments for that investors can understand, I think that's always good for any sector. So I think it's moving in the right direction in terms of what I've seen in the last few years.
Excellent. Abis, thanks very much for your time today, and we look forward to hearing more from you next month. As I mentioned before, our Alternative and Receivables Finance Forum, which is on the 28th and 29th of November in London at the offices of Clifford Chance. Abis, thank you very much indeed for your time this morning. Thank you.
Thank you, Michael. Looking forward to it. Thanks.